Okay, question number 5. Nazim owns a wholesale business and has prepared draft financial statement for the year ended 30th June 2020, his first year of trading. When they say first year, they basically don't have opening. After preparing this financial statement, some error were discovered. Number 8, the question saying that complete the table to indicate the effect of each error on the profit for the year and the working capital. This question A, the section A is to take note is that error effect on profit or working capital. Sometime in the exam, they could also ask after correcting the error, what is the effect on profit and working capital? But this question, this is not the one is the error before adjustment. What is the impact on the profit and also working capital? Write understated, overstated, or no effect. The first one example they given to us. Here, repair to office equipment has been entered in the office equipment account. So I will just put in the implication. So what happened is that repair account understated. There is the account that expenses understated. When expenses is understated, profit will overstated. There is an implication from the let me adjust the file first. Okay, profit overstated. Okay, let me arrange the file first. Okay, let me repeat again. Repair is the expenses account. When repair is understated, expenses understated, profit will be overstated. Okay. Why working capital no effect? Because when we wrongly debited into office equipment account, this account is a non-current asset section. So not working capital is only affecting when give impact is when there is a change in the current asset and the current liability. So since that this is go through the non-current asset, so therefore there is no impact on it, no effect. Number 2, adjustment. Number 2, error. No adjustment has been made for the insurance prepaid. Insurance prepaid. Okay, should deduct from expenses account. So now what happened is we didn't adjust. It will cause the expenses overstated. So when expenses overstated, profit understated. So there is an implication of the account. when we forgot to adjust the prepaid. So profit will be, okay, profit will be understated. Next is that the insurance prepaid should be recognized as other receivable in current asset. So now we didn't recognize because we didn't adjust. So current asset understated. When current asset understated, working capital also understated. So therefore, this answer, profit understated, working capital understated. So here, understated, understated. So there is an impact. Next is that an irrecoverable debt not been written off. Irrecoverable debt is expenses. Recoverable debt is expenses. So expenses forgot to do. That means expenses will be understated. When expenses understated, profit will be overstated because profit is linked direct from the expenses. Next is that when irrecoverable debt is not written off, debt not written off, trade receivable overstated. Trade receivable is under current asset. So current asset also will be overstated. So when current asset overstated, working capital overstated because of the formula, working capital formula, working capital is current asset minus current liability. So there is the impact of the transaction. So here, profit will be overstated. Working capital also overstated. So here will be overstated. Okay, now next, no record has been made of the additional capital introduced in cash. So the double entry for additional capital is a debit, cash, credit, capital. So these two accounts is under the statement of financial position. Cash account and the capital account is under the statement of financial position. So therefore, profit no effect. So in this case, profit no effect, but the working capital, when we did not debit cash account, what will happen for the cash? Then we will have the lesser or cash understated. When cash is understated, current asset understated. Current asset understated, working capital will be understated as well. So this is the implication of the account. So here, profit no effect, working capital understated. So this one no effect, this one understated. Okay, next, closing inventory has been overstated. Okay, closing inventory overstated, cost of sales understated. Cost of sales understated, gross profit overstated. Gross profit overstated, profit will be overstated. There's a link of the closing inventory. When closing inventory overstated means that extra. Overstated, current asset will also overstated. When current asset overstated, working capital also overstated. So there is an implication for the error. Okay, so this will be overstate. So there is an answer for this question, and the impact and the link of the error that I highlighted in here. This will help you to understand more about the implication. Okay, now let's move on to the next section. After correcting the error, Nazim compared his result with those of his brother Aziz, who has similar business. So Nazim and Aziz, current ratio, basically Aziz is better because this one is 2.12, higher is better. Liquidity, same thing, Aziz is better than Nazim. Return on capital employed, Aziz is also better. Suggest two reasons for the difference in the current ratio. Why that current ratio for both are different? So the formula, just talk about formula first for current ratio. Current ratio. Okay, the formula is a current asset to current liability. Okay. This one higher means that Aziz has more current asset than the current liability. That's why Aziz can have more. You notice that this amount is 2. Then basically Aziz had 2 times ability to pay off the debt. So number 1, we can say Aziz has higher amount of current asset compared to Nazim. Okay. Other than that is number 2. Maybe Aziz has has less liability, which is a current liability. So Aziz has lesser amount of current liability compared to Nazim. If you don't want to talk about Aziz, you can talk about Nazim, but just change the word from, example, in here, you want to change Nazim. Nazim has a lesser amount of the current asset. And then here, you can say Nazim has a more amount of the current liability. That also can be done. Okay, now let's move on. Okay, liquidity. Liquid asset or acid test ratio. Acid test ratio formula basically is we take current asset minus inventory to current. Masuk. Give me a minute, something wrong. Okay, let me one more time. Okay, current asset minus current liability to current liability. Okay, So current asset minus inventory. It basically means that liquid asset does not include the inventory. Okay, same thing, number 1. What we can talk about it. Let's see what is the better information that we have. Because this one, Aziz, is better. Aziz has more cash compared to Nazim, because he still have the highest compared to Nazim. Okay, next is that they want to answer for it. So we put 2 reasons for this one. Next is that you can say Aziz keep lesser inventory, but other current asset more. Okay, or else you can talk about Nazis. Nazis has what? Nazim. Let me see what's the information can put. Nazim, okay. Nazim may hold too much inventory cause the cash or liquid asset less than current liability, because you notice that after exclude the inventory, Nazim is hold less than 0.77 the current asset. Basically, he hold quite a lot of the inventory, cause that liquid asset less than current liability. Number 3, ROCE. ROCE is talking about the, I put formula first. ROCE is taking the profit, okay, profit before profit from operation divide by the capital plus non-current liability, and then times 100%, which is capital. Another word we call capital employed for the capital plus non-current liability. So profit from operation is the profit before interest charge, or so-called, sometimes we call finance costs. So this one had to take notes. The new syllabus emphasize profit from operation and the profit for the year. Okay. Now, this ROCE, what is the purpose of ROCE analysis? It will help us to find how much profit earned from each $100 invested into business. So that is what we can indicate as well. And then it's also show that the efficiency of the business use the asset or resources to generate income. There is an ROCE meaning. So come back to this one. ROCE, which one is better? Same thing. Aziz is better. So in this case, the ROCE can be better. Most probably Aziz has higher profit from operation of operation compared to Nazim. And then other than that, talk about the capital employed and the capital, the proportion, the increase of what we can see, the increase of profit, the increase, the holding or not the holding, the capital employed held by Azim is lesser proportion compared to Nazim. So there is capital employed lesser, profit will be less. Okay, now let's move on. Another, you can say that Aziz is using his Aziz use his resources more efficient compared to Nazim. This all the answer can be used. Okay, now let's move on. Nazim discovered that his rate of inventory turnover was also lower than the Aziz. So what is the inventory turnover? Inventory turnover, the formula is taking the cost of sales divided by the average inventory, and the answer we will get in a ton. How many tons that you use your stock to generate the sales. So in order to get the inventory turnover higher, what we got to do is we must have the cost related to cost of sales, which is the sales activity. Sales activity is better or higher, okay, to sell the inventory. Okay, another one is sales activity is higher to sell the inventory and generate income. Okay, that is one of the higher if we want. Another, if we want to have inventory turnover higher, we have to have holding lower of inventory level. Means that you buy and sell when you need, only you buy and sell. So that is will reduce the holding level. Then it will cost the inventory higher. Because basically for this the question, you need to take note one thing is that using the formula base, the formula base is in here. Inventory turnover is cost of sales divided by the average inventory. So in order to get this one higher, because they say that Aziz is higher and Nazim is lower. If you want to get it higher, this one must be higher. But this higher is related to the sales activity. Okay. Another is inventory. This is using the mathematical concept. When this one increase, this one must decrease. So that can increase the inventory turnover. So there is a message to send out is that use the formula to indicate whether you want to higher inventory turnover, increase the sales activity, which is this one cost of sales will increase, and the average inventory had to reduce. The holding level of the inventory had to reduce. Okay, let's move on. Okay, Nazim is concerned about the length of time his credit customer take to pay their account. He is considering operating a strict credit control policy, required customer to pay within 30 days. 30 days is quite common in the business. Advise Nazim whether or not he should introduce this strict credit policy. Justify your answer by providing 2 advantages and 2 disadvantages. So as usual, when the question asks you to advise and ask to indicate 2 advantages and 2 disadvantages, you summarize with the notes first. Let's see, we put in what are the advantages when we have a strict credit control. The risk of irrecoverable debt reduced. That is one of the good things. Second is that the thing, if you have the strict, then your cash flow will improve because you get money faster. Money in faster. Okay. Other than that, you will have the less, okay, combine with this into it. Cash flow, money in faster. So then what you can use, can use for other purpose. Okay, this is one of it. Okay, now next is that this one, when it's irrecoverable debt is reduced, it will also administration cost reduce. Okay, disadvantages is, we can say, when we want to encourage people pay faster, most of the time we have to give to encourage people pay faster. Then we need to give the cash discount to encourage them. So when we give the cash discount, this is the expenses to business. Then our profit reduce. That is one of the problems that we have. And other than that, you want to have control, tight control on the credit control policy. That means you have to hire a staff to handle credit control section. So when you hire people, then you have to incur staff costs. So this also will affect the profit. And if you too strict, then some customer may stop buying and go to buy from other competitor. Okay, that is a problem you may have. But conclusion or recommendation, what do you think that you should do in order to encourage or not to encourage? Most of the time nowadays, because people have worried customer cannot pay, they would rather not to do the business. So for me personally, I will advise Nazim to implement the strict credit control policy, where 30-day credit term is reasonable to customer. Because basically 30 days to get people to pay you, that is a reasonable period. It's not considered very strict. So that will also help. Okay, it help Nazim to reduce irrecoverable debt, reduce irrecoverable debt risk, and improve his cash flow. So there is a recommendation that I put in. I say I agree he implement the strict credit control 30 days because it's a reasonable. So that is for the question number 5. Okay, we end here.